Good evening, everyone. This is Joe Henches, and this is Beyond the Chart, a market update for November 8th, 2013. Today, the Dow kind of took it in the shorts today, down 50 some points. Well, I got the S&P up in front of me. I was looking at that. 152.88. So we'd been talking about how we could potentially get a pullback and how it could pull back to the 10, the 20, maybe as low as the 50-day. We're just going to have to watch this one real close and see what happens. This was definitely a bearish engulfing bar that you've got here on the Dow Industrials, because the open was above the close yesterday and the close was below the open yesterday. The high was higher than the high yesterday and the low was lower than the low. So an outside down bar. Back over here on the S&P 500, very similar type bearish. This one did close below the 10-day. Now the one thing I want to point out is when you look at there's potential support will come in here at this point in here. Where is that? About 1730 on the S&P 500. So we want to kind of look for that. Let's see. I still think this again. Some of the guys. There's a guy out there fairly popular following in terms of Elliott wave, and he's kind of calling this a fifth wave completed. Mostly on the Dow. He's going by the Dow for that thing. He's calling this fifth wave completed. I just don't see it, but I mean we'll find out, because this is a pretty short fifth wave, given that we're talking about literally. This is wave 1, wave 2, wave 3, wave 4, and then to this be a very short fifth wave. Now he's called a short fifth wave in here before on an upswing of 5 waves, but I don't know. We'll just have to wait and see what happens. I mean, it's a fairly bullish environment right now, but that doesn't mean anything. I mean, we've got some things that have been showing up as negative. NASDAQ got real negative today, about 2%, I believe. Yeah, it's down 74 to 38.57. So this one really was a lot weaker there. But again, we're above this potential, support in here. What was resistance is now going to become a potential floor. And that's going to come in right about at the 50-day moving average and right at the bottom of the Keltner channels. Now, these Keltner channels, let me talk real briefly about that. I got the parameters for these from Linda Ratchke. Linda's got a site out there. She's a well-known market wizard. And basically, this is around a 20-day exponential moving average. And I use 2.5 times a 10-day average true range. Okay, so those are the parameters that I use. 2.5 times a 10-day average true range. And I use a 20-day exponential moving average. I like these bands better than the Bollinger Bands. I used to use those a long time ago. I just do not like the way I know how they can compress and expand, and but you can see when the volatility is shrinking. I mean, I don't need to have somebody tell me the volatility is shrinking. You can see it. And the average true range is going to tell you when the volatility is shrinking also. So I just wanted to pass that on. Look at the ETF, the financial ETF, ELF, they call it, is the symbol. Again, we talked about there was 4 days, another close down below the 10-day moving average, and the 10 is breaking below the 20-day moving average, okay? So a little negative, just kind of like the way it did back over here and here. So we've got the possible beginnings of a sell-off. Now here's something I haven't shown you before, and this looks really messy. This is a short-term trading index, or TRIN as they call it. It basically looks at the volume moving into advancing stocks and the volume moving into declining stocks. It has a ratio, and when you're above like a close above 1.6, and really bearish is above 2.0, and you can see the closes are up here on with the white bars. The red bars down here, the lows down below 0.9, 0.8. That's when it's a very bullish ratio, and that's it's kind of a contrary indicator. So it's like when you got real bullish, that's bearish. When you got real bearish, it's bullish. So if that makes any sense. So, right, and the other thing you're going to see on here, and I'm going to blow this up a little bit, is this blue line is a 10-day exponential moving average of the close. And when that 10-day gets close to this buy line, that's when we've got a potential buy signal. Now, it's never really gotten there, even in the sell-off in like August and back in June, it never even got up there. But in June, you got this really bearish close of way above 2, just like you did here in late August on August 27th. And now we've had a third highest close, we're 1.65 in the last month and a half or so. So, it's not showing us that there's a bottom, but it's telling us that we're getting, as we can tell, some more bearish activity. The high-low indicator I talked about, I showed you this before. This is kind of giving me a little bit of a lead here, the 10 days below the 20-day. And this really broke below the 20-day a couple of days ago. And it has a tendency to lead the 10-day doing that on the 20-day on the indices. Wanted to take a quick look at some stocks. The Facebook, I'm still looking for a possible, this is a pullback. I think we're in a fourth wave retracement here, a correction. And, I wouldn't be buying until it's kind of like you got to wait to see the whites of their eyes to whether or not you're going to get in here to buy. But that's what I'm looking for. I'm looking for a setup, kind of waiting now. Yandex, similar type thing. I think Yandex has completed three waves, and I think we're in a fourth wave. Had an extended third wave, so fairly shallow correction is what I'm expecting in here. Let me talk about Baidu. I think Baidu is topped out. I think this is the fifth major wave of this, and so now, and what Baidu's got to do is Baidu's going to end up correcting all the way down to probably down into here. So we're talking about, I think, down into the 90s or below 100 for sure. So we'll see how this acts and see if it really rolls over like that. The last one I want to talk about is Quahoo 360. Okay, and I've talked about this for several weeks now. I'll tell you, I got in, and this has really played hell with me, but I got in on Friday, on the 25th, which was, okay, the signal was here. I missed it. I got in here on the 25th, bought options at $208, and I got Novembers, and I got November 80s. They were out of the money, and I thought this was going to really move. Well, on that very next day, on a Monday, they traded for over $600, and I didn't get out. So then it backs up on me. So this is the day, it goes all the way down, trades over $600. I bought them for $208. I come back up here, and so then I'm like, okay, now I don't know where this is going, and I get out for almost break even, $215, make a couple percent. That's it. It was very frustrating. And should have grabbed the money when it's up, and that's a lesson to be learned. You need to grab it when it's handed to you, especially when it's handed to you in a day. And on Monday, on Friday the 1st, I got back in, then got back out and took a 51% loss, got in at 175, sold at 86. And the very next day, this last Tuesday, I got in again at $108 on the options. And because I just couldn't, what I was seeing in the waves and the way this was acting, I just couldn't get past the fact that I thought this thing was going to really drop. And then, sure enough, started yesterday and it continued today. And I got out when it was at $79 a share, sold my options for $355 that I bought for $108. So that turned out okay. The lesson learned is when you get handed a profit right off the bat, just take it and run. And you're always going to get a chance to come back in and get another chance to get back in and enter again and do the play again. So anyway, that's it for today. I'll talk to you this weekend. Have a great Friday. This has been Joe for Beyond the Charts.